Hello everybody, my name is Michael Leighton. I am the CEO of API Global. Today joining me is Lewis Finn, the Global Sales Director for API Global. Welcome, Lewis.
Thank you.
We're here today to talk a little bit about the UK autumn budget 2024. We're going to analyse the results of that budget and provide our professional opinion and advice on how we overcome some of the challenges presented. So after weeks of, or months should I say, of speculation on what taxes would or wouldn't be included in the budget and introduced, Rachel Reeves yesterday delivered the first Labour budget in 14 years. Now, although income tax wasn't to be increased, lots of other taxes were and are. And for the first time, we learned that what we and the general public thought was a £22 billion black hole, as the government refers to it, that was more like a £40 billion black hole, Lewis. So that's not great.
Sizable.
Yeah, it's sizable. So we're just going to run through. We're going to have an open conversation today between the two of us on the key points and the key impacts of that budget on the property world and the property investment world. And just give our opinions and thoughts on what clients should be thinking and looking to do and how we can move forward. Okay, so first, national insurance contributions for employers. We were informed yesterday that 1.2% increase has been introduced or is being introduced, taking the contribution for employers from 13.8% to 15%. And they will look at reducing that threshold also down to £5,000 from, I think, around 9,000.
Yeah.
9,500. So, not great for employers in the UK, not great for businesses in the UK. Although there is a proposed increase in employment allowances, I personally think that is papering over cracks. I think it's a big blow for UK businesses in an industry or a market whereby there's already a lot of pressure on businesses. I know the government talks about they're trying to protect small businesses, but when it comes to real estate, developers, with developers, the majority of development in the UK is privatised and it's the numbers are already tight.
I think if we look back over the last 6-7 years where we've had Brexit, we've had COVID, we've had the rise in cost and interest rates and the debt that they've borrowed, so the last thing they wanted to do was additional expenditure on current employees.
Yeah, no, absolutely. And also with that comes the increase in minimum wage. Now, I totally understand why that needs to happen within the UK. We've got to protect the general public and our public services as well, for that matter. But all of these, when we actually break it down and we're looking at delivering and closing that housing deficit and delivering developments to the UK and badly needed housing, there are obviously significant downsides on increasing the cost of running businesses.
Yeah. Okay,
so moving on from that, next is capital gains tax. While there were some increases in capital gains, property related remains unchanged. So that is 18% on lower tax bracket, and 24% on the higher rate tax bracket.
I think on that as well, listen, from a property perspective, I feel like we personally come out quite unscathed from the whole situation because, there was Labour come out months ago and said, prepare for carnage. What was going to come wasn't going to be very pleasant. There was talks of capital gains rising in line with income tax levels, right, which could have been disastrous. But again, it's how we adapt to situations, and whilst it remains unchanged for now, typically the advice that we always go through with investors is, well, don't sell and trigger a taxable event. Release equity where you can retain your asset value,
build value,
redeploy that capital and go again.
Yeah, look, I think that's really important. I think, fundamentally it's a positive, isn't it?
Yeah.
Because there has been, dare I say, smoke and mirrors over the past few months where it's almost like the government have teed us up for the worst and have just fallen short of that, and actually, all in all, the capital gain situation, it's a positive result. It, as I said, remains totally unchanged for residential. So that's great. And actually, the other increases for non-residential assets is less aggressive than predicted as well. So that's a positive. Okay, so the next point was inheritance tax. A relatively positive result. A positive result. Actually, on inheritance tax for property investors. The threshold has been frozen for a further 2 years. So the initial freeze was until 2028. That's now been extended by the Chancellor for a further 2 years until 2030, which essentially means £325,000 can be passed down tax-free, increasing to £500,000 if there is a property held within the estate which is passed directly to descendants. So not as bad as we thought it could have been.
No, when we mentioned carnage earlier on, there was talks of that threshold dropping to £100,000, which who knows how the market would have reacted to that. It wouldn't have been positive anyway. But the fact that it's been kept at £325,000 and extended can only be seen as a positive.
Now obviously with inflation over the next few years, technically, you're essentially going to pay more in tax. But I think the fact that threshold has remained the same and frozen for further 2 years, I think that's a pretty positive result there, isn't it?
Yeah, and also if you look at how we structure sort of client investments, any debt that you have associated on that property falls outside your inheritance tax liability anyway.
Yeah.
And I'd say 95%, if not slightly higher, of our investors will be mortgage buyers.
Sure.
Because everything that we do is about return on capital. So leveraging your assets doesn't just return your value now, but also succession planning in the future.
Sure, and that's the point, isn't it? There's a way around all of these introductions or new taxes or increased taxes in the budget.
Yeah.
It's just a case of sitting down and understanding that. And let's move on then to probably the biggest impact, which is the stamp duty land tax increase, which yesterday was announced to be increased from 2% from 3 to 5% for second homes and buy-to-lets. What are your thoughts on that, Lewis?
I mean, there was talks of stamp duty increasing anyway. The surcharge has remained the same as far as we're aware. Nothing's come out in the budget yesterday. The sort of initial talks were that was going to increase from 2% to 3%. The surcharge being anyone being non-UK resident pays an overseas surcharge. That's not changed. What's changed is the additional property tax, which has gone from 3 to 5 now. Yes, 2% is a hefty chunk in the grand scheme of things, but I think when you look at the overall picture, if you look at our average sales price, £350,000, right, 2% is a £7,000 additional fee that you've got to pay. Does that £7,000 ultimately have a negative impact on your strategy over that 5, 10 or 15-year period? For me, that shouldn't stop you investing.
Well, I think when you look at an extra 2% amortised over a medium to long-term period,
correct,
it doesn't really have a huge impact. The frustration for me yesterday wasn't necessarily the 2%. Don't get me wrong, that's not great. It's not a brilliant result. Zero increase would have been the best result, or even a reduction, but we knew that was never going to happen. It's the fact that it became effective as of today. So any contracts entered into after the 30th of October, which was the date of the budget, of course, there is an immediate increase in stamp duty. Now that's frustrating because in previous budgets or mini budgets, there was a lead-in time, wasn't there?
Yeah. So it'd be interesting to see if that remains intact for the foreseeable. The housing market, I don't think it's going to have a detrimental impact on the housing market in the slightest, because I think what it will actually mean is, from a rental perspective, people may actually have to rent for longer because the increase in stamp duty will force that, because they've got to save additional cash.
I think this is a really key point, that the thresholds that were brought in the mini budget in September 2022, they expire on the 31st of March next year, 2025. And they won't be extended.
Yeah.
So what the government's actually done is the threshold, which was increased to 250,000 with zero stamp duty, is going to be reduced to 125,000. But that's not just for the implications. Don't just impact investors, buy-to-let second homes. It's also for first-time buyers as well.
That's reducing to £300,000.
Exactly. So there's an increase until March next year, but after that then reduces the threshold to £300,000.
Yeah.
So that for me creates a problem for residents as well as buy-to-let investors.
We talk about the term all the time about generational rent and how long it takes now for first-time buyers to get on the property ladder.
Yeah.
This potentially has a harder impact on them and pushes that from average 34, 35 to 38, 39 potentially.
Well, this is the point. So just for the viewers, generation rent is a terminology used for to describe an entire generation of people who cannot afford to get on the property ladder in the UK. And just drilling down on the stamp duty reforms, there's a few points I want to touch on. There's some impacts that sometimes you feel the government don't consider.
Yeah.
There is a big push on affordable housing. And again, we're all for that. We completely support the need to stem the housing deficit. The UK badly needs more houses to be built. So affordable housing is great. The challenge with affordable housing is who's going to build it. Are these requirements going to be put onto developers who are private companies who already have been hit with employee national insurance contributions, increased minimum wage,
as well as everything else over the last 6-7 years?
Exactly, right? Exactly. The Section 1. We're talking what COVID impacts on the supply chain, increase in interest rates, so higher debt, higher cost debt, Brexit. Removing
labourers had to leave,
removing a lot of the highly skilled, low cost workers. Developers have had a real tough time of it over the past 7 to 10 years, and it's remarkable that they still manage to deliver as much as they can on the tight margins that they're working to today. Yeah. But the way in which the government achieve affordable housing targets at the moment, or one of the ways, is the Section 106 agreement, which is by bringing in the Section 106 agreement is part of the planning process, and it's essentially an agreement in place between the government, local authority, and a private developer, whereby in exchange for planning permission, they will build a school or build a road network or infrastructure, or deliver affordable housing as part of the project. Now, developers don't make their profits on affordable housing. So my concern on that is this going to have a detrimental impact on the supply to the UK? Yeah. And are the government reforms really going to help residents of the UK get on the property ladder? Or longer term, does it really, does it impact everyone? And one other point to mention is chains. The UK is completely normal for there to be 4 or 5 houses within a chain when buying a property.
Yeah, sure.
Now, more often than not, there will be a buy-to-let investor somewhere in that chain.
Yeah.
So how many of those chains in the UK are now going to collapse due to the stamp duty reforms kicking in as of today, October the 31st?
Yeah, and listen, it's a massive knock-on effect that I don't think they take into consideration. I think we talk about all the time, regardless of the political party, I personally don't think you can solve the housing crisis. They're talking about, it's an interesting one, so they talked about increased taxes for farmers and farmland. So is that sort of way of saying, well, we need your land and this is the way we're going to sort of get it, to try and build more properties? But what you've then got to remember is farmers are in rural areas. Not everyone wants to live in a rural area. Sure. If you're commuting into a city centre, because guess what? There's no infrastructure or transport links currently implemented in those places. Yeah,
there were planning reforms mentioned yesterday, but again, this is the following day from the budget, so we don't have all the information. We need to wait for the more detailed reports to come out, and we'll obviously provide our analysis of those when we see them. But it will be interesting to see how the government, how this Labour government, where Tory governments have failed consistently for the past 10, 20 years.
Well, they did well at hiding a £18 billion deficit.
Well, they're good at hiding money, of course, but they're not good at stemming a housing deficit.
No.
And it'll be interesting to see what these planning reforms involve and how they expect to increase significant requirements for affordable housing and probably put those onto private developers and just tighten their profit margins and see how that actually increases supply in the market, because I'm confused a little bit as to how they will do that. So let's go back to stamp duty. With the increase in the surcharge, who actually bears that cost? Is it the investor that bears the cost? Obviously, at the front end is the investor, but actually behind the scenes, is it something where essentially that falls onto the tenants to pay? Because the way I see it is that with an increase in secondary home and buy-to-let stamp duty, that could reduce the available properties in the market on the buy-to-let market, and therefore the obvious impact of that would be less supply, increase in demand, and therefore increase in rentals.
Yeah.
So it might actually result in the tenants bearing the cost of this. Equally, does it fall on the developers, right? Do developers now have to revisit all of their development appraisals and look at how they can carve out additional incentives for the clients? What are your thoughts on that?
I mean, we've been looking at some schemes and doing appraisals on some schemes for 12, 18 months, right? And there's always been that sort of thought process in the back of developers' mind that why would I build now when I've just gone through everything that I've gone through with COVID, with Brexit, with the cost of debt increasing the way it did over the last 2 years with senior and mezz debt. If you try and say to a developer now, we need a stamp duty incentive, they're going to go, let's just wait for the dust to settle. Let's just wait that little bit longer for rates to come down even further, so his borrowing or her borrowing is less to build. But with that, supply stops. But the world doesn't stop continuing and evolving, and the demand doesn't stop growing. So if we're reliant on the developers to sort of look to bridge that gap, that will hit the tenant market even harder.
Yeah, absolutely. And look, I think that's the point, isn't it? It's not necessarily going to impact investors. It's going to. I think the tenants and developers are going to end up bearing the cost of this.
Well, it's like you said, it's a small cost up front, but in the longevity of the investment, it's minimal.
Yeah, absolutely. And what it does is it adds pressure to an already broken housing market, which essentially results in less properties delivering to the market, increasing demand for rentals, extending this generation rent, extending a housing deficit, but essentially for an investor, increasing rents. So there you go, and capital values with that. Okay, so what we'll do then, let's just, thank you for that, Lewis. Let's just run over and just have any final thoughts on the implications on from the budget. So firstly, national insurance contributions for employers, which have increased 1.2%. What are your thoughts on that, your final thoughts?
From an employer perspective, there'll be certain companies or businesses throughout the UK which potentially don't survive the increase. The cost of minimum wage increasing, the cost of national insurance contributions and the thresholds that kick in from. And what you may start seeing is some companies in the likes of Canary Wharf or Zone 1 London have to relocate and downsize to some of the regional cities. Now, that plays into our hand because one of the sort of macroeconomic drivers we focus on is corporate behaviours. Where are companies relocating to? For one, lower cost of rent, lower salaries, but ultimately lower cost of living for everyone involved. Yeah,
sure. And it's and I think the point you're making there is there's always opportunity, right? Yeah. I think it's our job to identify those opportunities, and if that means that corporates are moving out of London, corporate relocation is one of the market indicators, as you say, that we focus on. Then there is an opportunity there. It's just about us identifying that and identifying the areas in which to invest. It's just a shame, isn't it? Because looking back at COVID, businesses in the UK lost a lot of money through not being able to operate properly, and it looks like they're going to have to reevaluate and reassess now. But obviously, like we said, there will be opportunities with that for investors, and we'll be at the forefront of identifying those opportunities. Capital gains tax, relatively positive. Well, very positive. No change. So,
no change. And again, I think one thing to reiterate is there's only that tax when you sell. A lot of the strategies we implement with our investors is release equity, retain your asset value, and reinvest and go again.
But also, capital gains is almost a friendly tax because you're only paying a tax
you've made money
when you make money. Yeah. Exactly. Okay. Inheritance tax. Not a huge amount to say on inheritance tax other than the threshold with property the threshold has remained the same, and it's been extended for a further 2 years until 2030.
Yeah.
Okay, the big one obviously is stamp duty. We've covered that fairly comprehensively. If anything further comes out, we will obviously update. I think really, just to summarise, it appears to be a one-off budget, doesn't it? In the sense that there's a £40 billion grab happening here from the government, so we shouldn't see that again. That said, the Chancellor hasn't shut the door on potential further reforms later down the line, so we'll just have to assess those as and when, and if they are presented.
And again, sorry, just on that again, I think looking at that £40 billion tax rate, one of the main drivers they want to focus on is NHS. How we rebuild the NHS to be what it used to be, and with that comes job creation.
Sure, exactly.
So again, it's how we spin that almost uncertain or volatile is the wrong word, but the opportunity it creates off the back of it.
Exactly. Look, a lot of the reforms here are positive. The long-term plans from the government are that they're going to improve the NHS, like you said. This has taken a massive hit through COVID and over the past 10, 15 years. So it's critical the NHS is improved. So we're all for that as well. Look, I think looking back, just a final thought, really. When the 3% surcharge was introduced in 2016, everybody was shocked. It was panic stations. And what's happened in those 8 years? We have built hugely profitable, high-performing portfolios for clients all over the world, because what that has done, what the government recognised then, and I think essentially what the government's recognising here is they're expecting growth, they're expecting capital growth, they're expecting rental growth. We know that the reforms are not going to stem this housing deficit any more than previous governments. So there is always going to be people that can't get on the property ladder, can't afford to be on the property ladder. There's going to be a perfect storm for investors. It's about API Global as a business identifying the areas in which to invest, which is what we're top of the game at, and just looking at the medium to long term plan, which we promote to clients.
And that's the crucial bit. It's medium to long term. UK property isn't buy now, get rich tomorrow. It can be quite mundane to a certain degree, quite vanilla, boring, but it works, and proof's in the pudding that it works.
Yeah. Okay, so that concludes our analysis of the budget. Lewis, thank you for joining me today. Thank you guys for tuning in, and we will happily provide any further updates as and when we can. Thank you.
Cheers.